We're going to get started here. Welcome to the most exciting day of your life. That's if you've had a really bad day. This is going to really change.
I came all the way this morning just for this.
Okay, well, please don't leave. Good morning, welcome to Minister's Tax class here, and I have a real interest and excitement and passion for this. How many of you currently, personally, do your own taxes? Or anybody here personally do yours? When I was taking some income tax classes, we were given this little document. It's called the newest IRS short form. Line 1, how much money did you make? Line 2, how about that money under the mattress? Number 3, send it all in. So, hello, Jen.
Hi.
And so that's not my rule. You can actually do a little better than that. So, but it's exciting. Just a little bit of background. I was originally a business major, and part of that was that I took some tax classes as well at Minot State University, and then I've done my own personal taxes all my life. I used to do it in paper before the advent of computers, and there's some reasons I still like the paper, and I'll talk about that a little bit. But my original major was business. My family was in business, so I kind of was around business all of my life, International Harvester farm machinery business. And then I owned an auto parts store, and so I worked on the business side of that. And before we felt God calling us back to school and to ministry, and so I love that. But my interest in income taxes for ministers peaked when I had conversations with pastors who came to me and almost in tears. They said, "Winston, I just came from my tax guy. He says I owe $6,000. I made $28,000. How can I owe $6,000? I only made $28,000 and I owe $6,000 in taxes." And I say, first you pray with them, and it is heart-wrenching, heart-wrenching. And some came back the second year with the same thing. And I said, we got to address this. We got to talk about it. And he said, yeah, how can I owe $6,000 in taxes? I said, wait a minute. First of all, it might not be taxes that you're owing. It might be Social Security. Well, what's that mean? And the question is always, why didn't somebody pay in for me? I said, well, because you're self-employed. What does that mean? I've never had a job where they didn't pay it in for me. I said, well, now you're self-employed. What does that mean? And so you knew that there was this situation, but when the same guy came back, and this has happened a number of times, and the numbers may change, but I remember one, I make $28,000, or it might even be less, and I owe $6,000. Somebody said, that's insane. There's something wrong there. And that's it because of the uniqueness of the minister's tax role. So, Heavenly Father, we thank you for this privilege and honor to serve you in this way. We pray, God, that you would give us wisdom and insight and discernment, God, as we move into this very practical area that applies to so many of us here, or people that we love and work with. And so we just pray, Lord, your hand upon this. I pray that you give me wisdom and clarity in speech and understanding. We pray in Jesus' name. Amen. Did everyone get one of the handouts? Good. And we'll follow that along. So what we're going to do is we're going to start, because I have the tendency after a while I lived in this world. Like I said, for about 20 years, I went every year to an Internal Revenue Service school. IRS trained me for a week every year, and I involved in 2 programs called VITA and TCE, where I volunteered to do people's taxes. And we had some great teachers. They were the same one that trained tax practitioners. So I went to the school, and every year, and then I volunteered to do taxes. I'd set up an office in a senior center or somewhere. They'd set up appointments, and I'd do taxes all afternoon, 1 day a week, from January 15th to April 15th. also worked for a professional tax practitioner firm that did ministers' taxes, and so I would go and I'd work, 14-hour day and do it for a couple, 2-3 days as supplemental income. So that's kind of my background. I want to say I haven't been doing others' taxes for a long time. I don't know, 5, 10 years, I don't know. And I just want you to say, I heard Winston say this. I want you to go back to whoever is doing your taxes and ask them. I'm not going to give you wrong information, but something could have changed or something maybe misunderstood how I say it, and so I don't want you to. I've got doctors and lawyers in my family, tons of them, and they're like, Winston, go make an appointment with a doctor. I got this story. Well, it could be this. Oh boy, I got this. Well, you don't know. Come on in. And so I just. What was I saying? So I'm sure what I'm going to give you is as accurate as I know, and I do have a fair amount of knowledge, but please don't say, I heard Winston say. Go check it out with somebody that's doing it all the time. Could I get you to agree to that? That would be appreciated. And so we're going to start with a big picture and continue to go over it more than once. For me, it is so familiar. These terms are just like, I know them, I understand what it means, there's no question. You don't have to repeat it, I understand the context. It's like a person who just gets saved and you start talking about eschatology and hermeneutics and they're like, what are you talking about? So, and I'm not trying to say you don't understand this, but I'm just going to assume we're starting from scratch. So I'm going to start simple and broad and work down and get more and more detailed, and then we'll conclude looking at some documents. So, okay, so if you have your sheet, let's begin by talking about understanding ministers' tax forms. Okay, some of you, are you familiar with all of these numbers, all of these names? Some of them, half of them? Some of them. Okay, we're gonna talk about what these are. And because I'm going to be using these terms throughout what I talk about, and so just so you understand what they are. A W-2, everybody has gotten lots of those. That's the wage and tax statement. You get it at the end of the year. A W-4 is the employee withholding allowance form. When you go to work at a place, they give you a W-4. You fill that out. That helps that employer. There's a 1099. That comes in a variety of 1099s, but what we'll be most familiar with is 1099 miscellaneous, which now tends to be the NEC form. The 1040, that's the standard income tax document. And we'll talk about that. Everything flows into that final document, the 1040. It's used to file your taxes. There's a Schedule A. Schedule A is a form if you're itemizing your deductions, is a Schedule A. Schedule C is what I used to prepare all the time as a pastor. It's the profit and loss from a business, Schedule C. Every business completes a Schedule C, and that flows into the 1040. Then we'll talk about Social Security exemption. Ministers can opt out of Social Security. And that's called, and I'm going to caution that in a huge way. Then there's FICA. People talk about the two kinds of taxes, FICA and SICA. FICA is the Federal Insurance Contributions Act. And SICA is Self-Employment Contributions Act. Dual status, we're going to talk about that, and that's the uniqueness of the minister. There's something also unique to us, and that's called a housing allowance. What does that mean? There's a number of names it goes by. And then we'll talk a little bit about estimated tax payments and quarterly withholding. And then we conclude with something that I really push, and that is the volunteer income tax withholding. Oh, I don't know, one of my kids got a hold of this document, put the pictures in here. These are my kids, Melanie, my oldest, Winston, Ryan, Adam, and my baby, Brittany. Anyway, got that taken care of. Like it was such drudgery, yeah. So I'm going to start out with a big picture. If I start to go on my notes, I don't line up with that, just let me know. For anyone, basically, there's two types of income. You get wages or you get self-employed income. Wages or self-employment. There are two categories, and they are an employee. You work for McDonald's restaurant. We'll use that phrase. So you know, just a traditional business, you work for them. Or you're self-employed, like Farmer Jones, who has his business on the farm, or Tom's tree moving service. And then there's this exception, and it's called ministers. And so we'll talk about that here in a moment. Next slide. You know how people have somebody who does this for them? I'm talking to, next slide please, sir. I don't pay him enough. There's two types of taxes. There's payroll taxes and there's federal income taxes. Payroll taxes, that's 15.3%. And then there's income taxes. We're going to hit all of this again and again and again. There are three federal taxes paid on wages and self-employment. It'll seem redundant, but if you're not familiar with it, just bear with the rest of us who need to hear it more than once. There are three federal taxes paid on wages and self-employment. They are federal income tax, payroll tax, Social Security, payroll tax, Medicare are the three federal taxes paid. There are two types of deductions. You can get a standard deduction, already predetermined based on your class, married, a number of things. And then there's the itemized deduction. Itemized means you're keeping track of certain things. Sometimes it's more beneficial to do a standard deduction. Sometimes it's more beneficial to do an itemized deduction. Itemized, you keep track of all those expenses, detail them out, and you file that way. There has been some major changes in this area. And the government is, 1986, they had the Tax Reform Act where there was significant changes. And then recently, there were some changes to the standard deduction. And the principle is they're trying to move us away from itemizing. Itemizing is much more challenging, and that is more difficult for them to prove. And so they're doing some things to change that. For instance, look at your sheet. I think it's only on the sheet. In the past, your standard deduction, that's not itemizing, you're just taking the standard deduction was, standard deduction is you take your income, you take a number of benefits and things, and you come out with what's called your adjusted gross income, and then you subtract your standard deduction or your itemized deduction. So you take your amount of adjusted gross income, you subtract your standard deduction, and you get a total, and that's what you pay the taxes on. There's been some huge changes. Let's look on the sheet. I think, is there a number on that sheet?
Yes.
Yep, there is.
I've got two sheets here, one that I've been teaching from and then the revised one here. So, for a single person, the standard deduction in 2018 roughly was $6,350. If you were married, the standard deduction was $12,700. Then there was personal exemptions. Like they said, boy, you got 8 kids, that's a lot of exemptions. That's where that gets calculated at you know, like $4,050 per exemption. Mom gets one, dad gets one, each of the kids get one. Those things together generate your standard deduction. That's been changed. It could reverse itself, but then they came out with, if you look at the right, the 2022, the single standard deduction went from 63 to 12,950. The married went from 12,700 to 25,900. Basically, if you calculate it out, it's about the same as mom and dad and 2 children. If you have more children than that, you just got it in the chin. If you have less than that, you benefited by this new change. Changes in personal exemptions, simply stated, a tax exemption is money the Internal Revenue Service allows taxpayers to subtract from their annual taxable income expressed on their tax forms. As of 2018, that exemption went away. In place of it, the standard deduction got doubled. That's basically what happened. There are 3 federal taxes are paid on wages and self-employment. Income taxes, Social Security, Medicare. I'm going to be hitting things more than once, guys, because Social Security and Medicare taxes are collected under one of 2 systems. Under the Self-Employment Contribution Act, SECA, or self-employed person pays all the tax. With the SECA, self-employed, you pay all of the tax. You pay it. Nobody's paying it for you. That's what that pastor was saying. Why isn't somebody paid it in? Because they don't. You're self-employed. You pay it in. You aren't dependent on anybody. The church didn't pay it in. Why did they? Because they can. There's an exception, and there's tons of exceptions. And then under the Federal Insurance Corporation Act, the employee and the employer each pay half of the Social Security, Medicare taxes. No earnings are subject to both systems. So if we take the situation, let's say your paycheck is $1,000, and if you were under the FICA system, you would be paying, that's a standard employee working for McDonald's, that's the big arches. Remember the total is 15.3%, but in this situation, they subtract 7.65% out of your paycheck, and they add from their own funds 7.65. And together, that total says 15.3%. That's the FICA handling of it. If we look at the SECA, you know what it says? You pay it all, 15.3%. And so, I'm gonna just keep hitting some of these things. I apologize for the redundancy, but it can get complicated. So then, one at the bottom of the page has a couple of helpful publications. Oh my goodness, things are leaking over. And what's called like the Taxpayer's Bible is something called, if you're interested in growing and learning about this, Pub 17 is a very, very good document. It's about a 250 page document. It comes out every year, it's revised every year, it covers basics for every area. There's another document, and that is Pub 517. Pub 517 is a clergy and a minister's tax document. So there's Pub 17, it's like the big one, and then there's all these supplements that take one of those areas into a deeper level. Let's turn the page to page 3. And we're going to go through these terms once again, because I'll be using these terms, and if they aren't starting to get kind of in your head, it's not going to make sense. So there are forms, there are schedules. Forms and schedules all feed into your 1040. So let's just say, here's the big, this one still is working. So every year you fill out your taxes
And the main form is Form 1040. Actually, I think I touched it on myself. Well, we're good. I just will keep my hand moving. That's a 1040. That's got all the information on your taxes, and there's 2 pages actually, and you get down to the bottom here and you get to your AGI, adjusted gross income. This is basically income, some deductions, some other things, education, blah, 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 blah. And it comes down to this number here, and then the second page is very similar. And on the second page, it has your deductions, whether it's standard or itemized, and then it says this is how much money you have. It's called taxable liability, and then you go to a form and you determine of this amount of money that I make, how much is my tax. You put that amount in here of $5,000. This guy, $6,000, and then it goes to another other credits, and then how much did you pay in whatever forms? Well, I paid in $6,000, therefore I owe nothing. But this form, that's the main form. And what feeds information in to this line and this line and this line, and we'll look at that, is what's called forms and schedules. And I've talked about Schedule A. You complete that, and you get a number here, and you move that over to here. You got Schedule C. You fill that all out and got the income and the expenses, you get one number here, and that goes to here, line 7 in this case. Forms and schedules, and you complete those forms and schedules, and you feed them into the 1040 to get what you owe the federal government. Okay, let's go over these again real quickly. We're on page 3, understanding this taxes. The W-2 form is the official wage and statement that reports an employee's annual wages and amount of taxes withheld from their taxpayer paycheck. W-4. This is the employee's withholding allowance certificate. The W-4 tells the employer the correct amount of tax to withhold from the employee's paycheck based on the employee's marital status, number of allowances, dependents, and other factors. 1040, that's this guy here. Individual income tax return. Form 1040 is how individuals file their personal income tax to the IRS. It's used to report your gross income, the money you made over this past year, how much of that income is taxable after credits, deductions, exemptions. It'll determine the amount of tax you owe or the amount of refund that you'll get back. 1040. Then there's something called the 1099. There's actually a number of 1099s. The most common was 1099 miscellaneous. And now it's kind of being replaced by a 1099 NEC, non-employee contributions. Pretty much the same. They do the same thing, and people are still using both. 1099 miscellaneous form serves a similar purpose to the independent contractor as the W-2 does for the employee. Self-employed, 1099. Employee, W-2. The form reports the total amount of payments you received from a single person or entity during the year that you provided services to. Remember, Farmer Joe or Joe's tree service. He works for the church. He trims all these trees. At the end of the year, if they paid him over $600, that's the line. They need to send him a 1099. And you will probably be getting 1099s as well. Then there's these schedules that feed into there. Schedule A is your itemized deduction schedule. It's required in any year that you choose to itemize your deductions. This schedule has 7 categories in it. Medical expenses, dental expenses, taxes you paid, interest that you paid, gifts and charity, casualty loss, theft loss, job expenses, and certain miscellaneous expenses. And again, the Schedule A, which feeds into the itemized deduction, is getting tougher and tougher and tougher to use because they're limiting it. They'll say, how much are all the medical expenses? Well, then take that times 2%, that's all you get. Whoa, it used to be 5%. So they're continuing to cut down things to try to simplify it, try to encourage us not to itemize, not to use Schedule A, but do the standard deduction. Schedule A. Schedule C is a profit and loss from business. You use this schedule to report income or loss from a business you operated or a profession you practice as a sole proprietor, self-employed. What do you think goes in there? Or what kind of income do you get? That's weddings and funerals. That's more likely what that is. If you did a wedding across the state and they paid you $25, you put $25 in there, and then on the Schedule C, you put my expense, $310, travel, 2 nights lodging. You'd be out of business if that's the way you operated all the time. But it's for the ministry, amen, yeah. And then there's Social Security exemption. That's that provision for a minister to opt out of Social Security. And to do that, you complete a Form 4361. And you have to do it like in the first 2 years after you are credentialed. I discourage that. FICA, FICA is the acronym for Federal Insurance Corporation Act. FICA tax is the money that is taken out of, do you hear that? Taken out of your worker's paycheck to pay into what's called the older Americans, their Social Security retirement, Medicare. It's a mandatory payroll deduction. Mandatory. There's an exception, and it's us. Then there's SECA. That's the Self-Employment Contributions Act, to levy from the U.S. government on those who work for themselves. They levy this tax on you and I as self-employed. It requires you, the self-employed worker, to contribute taxes to both the employer and employee portion of the federal income tax, which funds Social Security and Medicare. So I'm repeating these things, and hopefully they'll kind of. And then there's us, dual tax status. Dual tax status means that the minister is an employee and he's self-employed. He's an employee of the church for federal income taxes. He is self-employed when it comes to Social Security and Medicare. The reason is they cannot force the church to pay that tax. They cannot force you, say, you pay half, they can't do that. It's an infringement on the protection of religious rights or something, and so they cannot force the church to do that. So you know who has to do that? You. And you have to pay it all, just your half. Then there's something called housing allowance, or parsonage allowance. It's an allowance that's designated. Really, you determine it, but it's, quote, designated by the church. It must be in the church's minutes of their meeting. And it's always proactive, not retroactive. So it has to be in the minutes before the beginning of the new year. Traditionally, you figure what that would be, you declare it to the church, they put it in the minutes, and that amount gets subtracted from your W-2 from gross income. But there's a few caveats. And then the way that ministers or any self-employed person pays his taxes, because the church can't pay it out in, you have to pay it in. And you pay it in through a vehicle called the Estimated Tax Payments Form, 1040 ES, estimated taxes. But there's something that I want to talk about here, and that is the voluntary. I mean, you make that choice. They didn't declare it. It has to be factored in a different. Voluntary income tax withholding. A minister can enter into a voluntary withholding agreement with the church to cover any income tax, self-employment tax that is due. Catch up here with. We're going to take a look at some special tax concerns for ministers. Make this big. I know a way to get rid of, so I can, it's small print, but it's showing the two of them. Okay. 6 special tax concerns. Clergies have a dual tax status, characterized as an employee for income tax and self-employed for Social Security. Income tax, that's what funds the government.
builds the roads, pays for the schools, pays the government, pays the president, pays the government, all of those expenses, that's a generality. That's income tax. That when you say, how much income tax did you pay, that's what that is, and that's what it's for. Then there's the self-employment part, and that's for Social Security. That's the money that you someday will get back when you retire. It was never meant to be your full retirement, it was meant to be a supplemental. And so you don't decide you're gonna live off your Social Security because you can't and you won't. Clergy do not have mandatory income tax withholding. Listen carefully, don't misunderstand what that's saying. Clergy do not have mandatory income tax withholding, somebody withholding. They are not mandated like McDonald's. McDonald's is mandated to withhold. But you can voluntarily have income tax withheld. The exclusion of housing allowance or church-owned parsonage provided rent-free for income tax. Your income tax, your Social Security, kind of keep those two separated. You have a housing allowance, that helps reduce your income tax side. It doesn't change your Social Security side, I'll talk about that. Clergy receive an income as employees and self-employed. When I get paid from the church to do the ministry of the church on a W-2, I do weddings and funerals for this person, that person, all kinds of people. I get other cash in other ways, that's self-employment income. Special one, we're gonna hit them again. Clergy have a dual tax status, characterized as an employee for income tax purposes. So just so you know, guys, just keep remembering, keep those things separate. There's the two sides. The money is either income tax, and that's to fund the government, and then there's Social Security, and that's retirement, let's call it. You see what I'm saying?
Yeah.
So this is the money, when you say, how much did you pay in taxes? That's really what you're talking about. This has nothing to do with funding the government, doing any of those things at all. Minister's classification. We are either an employee or a contractor. And based on that, we get a W-2 or a 1099. Assemblies of God ministers at the local churches are employees. This is a sticky one that some are still functioning differently. I'm just telling you what they want and what they prefer for federal income tax purposes. However, ministers are exempt from federal tax withholding. Doesn't mean you're exempt from paying federal taxes. Please don't misunderstand that. From federal tax withholding. But all ministers are self-employed for Social Security. For Social Security, they're self-employed. Income tax, they're employee. Social Security and Medicare taxes should never be withheld from the minister's wages. Special concern number 2, clergy do not have mandatory income tax withheld, but can voluntarily have income tax withheld. Okay. Are you following me? I'm going to hit it over and over and over again. So, ministers and volunteer withhold. Employees have federal income tax withheld, but ministers are not subject to income tax withholding. Ministers need to make estimated taxes payments as income is earned. As you earn your income, you pay it in. You earn the income, you pay it in on a quarterly basis. Or my encouragement is enter into a voluntary withholding agreement with the church to pay the income and the Social Security tax. Number 3, clergy can exempt themselves from Social Security taxes in a limited circumstances. What if I explain that? Clergy are treated as self-employed for Social Security. Ministers are under SECA, not FICA. Clergy can exempt themselves from Social Security taxes and not pay those at all. To claim SECA exemption, this is the limitations on. This has changed. There's 20 rules they have, but The minister, if you're gonna say, I don't wanna pay in social security, the money that's going to come back to me, some of them used to say, I'm gonna do it because this is the worst investment in ever. We're gonna pay in all of your life and what you get back in total, unless you live to be 150 years old, it's a bad investment. If you live to be 5 or 10 years old, you have paid in a ton and you're not getting back anything. But then there was some question as ministers, they were saying, I don't want to pay into Social Security because I'm funding abortions and because money of it goes to this and this, and they changed it, said that's not the reasoning why you can exempt yourself out. And these are the reasons you can exempt out. If the minister must be consciously opposed to receiving public insurance and Social Security benefits. I said, you know what? And this came out of like the Hutterites or Amish or somebody said, you're not, government's not taking care of it. We will take care of ourselves. We will take care of our people. They'll say, okay, you've just created an exemption. If that's the case, you have conscientiously, then we're not gonna force you to pay it either. But that's gotta be the basis, not like, this investment stinks. I could do way better if I put my money with, Edward Jones. The second reason is that opposition must be due to religious beliefs or a position of your denomination, and we don't have that. And so, guys that are out, got out a long time ago when they felt like the reason was different. I was out for a short period of time. They opened the window way back, and I got back in. It is one of the most cheapest catastrophic insurances you can have. It'll pay your Social Security when you retire, but what if something happens and you're disabled at 56 years old? They will start paying a disability income, and that's where that comes from. If you're not in the system, you're sorry out of luck. So I caution people, please be ethical. And maybe you don't like, maybe you don't want it, but this is the rules. Making tax payments are needed to cover your federal income tax on salary, less housing. Remember the income tax? You can deduct housing allowance from that and reduce how much you pay income tax on. To cover the self-employed tax on salary plus housing can be accomplished two ways. Voluntary, quarterly installments. Remember that 1040 ES, it calculates how much you send in quarterly. And they are due on April 15th, June 15th, September 15th, and January 15th. So you work January, February, March, by 15th of April, you gotta have that sent in. April, May, June, have to get by June 15th. These dates are accurate, but the basic principle is you work 3 months and you have the next 15 days to get it in. And that's one way you get the taxes paid in, or you can voluntarily income tax withholding through the W-4. That's the one I'm pushing, I'll get more into it. Or you can do like I did and have your spouse angry with you, and that is increase tax withholding from your second job or your spouse's job. And Candace could work and just about deduct everything, and she gets a $12 check for working for 2 weeks. That didn't go over well. Let's go on. You like that? No, yeah.
Poor Candace.
Yeah, poor Candace. Yeah. But we changed that. 4, exclusion of housing allowance or church-owned parsonage provided rent from income tax. Income tax, remember that? You can reduce that by your housing allowance. You will not be paying income tax on that portion designated housing allowance. It can be tricky. Housing allowance, parsonage, you can exclude from your gross income tax, the fair rental value of a house or a parsonage, including utilities furnished to you as part of the earnings. However, that exclusion cannot be more than the reasonable pay for your service, or if you pay utilities, you can exclude any allowance designated for utilities costs up to the actual cost. I'm gonna move through some of these exceptions kind of quickly just because of, when are we done?
12:15 or 11:15.
Oh, we gotta roll.
You can go on.
Okay, now, so here's a scenario to just help you kind of see that. So you say, I make 75,000, I'll just say it, 75,000 a year, and you declare that you want 25,000 of that 75,000 to be declared as housing allowance. You declare that, you give it to the board puts it in minutes. And so when you get your W-2, instead of saying 75,000 on line 1, it says 50,000. There is a line way down 14 where they might put housing allowance 25,000. So you declare it, so you're not gonna be paying income tax on it. It doesn't affect your Social Security, you're still gonna pay it on that, watch. But just putting it there doesn't automatically reduce it for good. Here's the scenarios. You designate 25,000, the housing expenses that you can support, what you actually spent was 30,000. You say, whoa, I'm gonna deduct 30,000. No, you can't. The fair market rental value furnishing plus is 33,000 on your house. You have a house, you declare 25,000, they subtract 25,000 from your W-2, but you end up spending 30,000. And the fair market value, when on the market, this thing's actually worth 33,000 a month. So how much, 33,000 a year, so how much can you actually declare? 25,000, no more than what was designated. Scenario 2, same thing, 75,000, 25,000 is declared housing allowance, you spend 25,000. Uh-oh, the fair rental value of that is not 25,000 with all these utilities and all these things, it's only 18,000. How much can you declare? 18,000, not the 25. And then that remaining excess, that $7,000, you know what you have to do? You have to bring that over on the top of 1040. You have to add that back in, and it then filters through all of the taxes. It's now, again, subject to income tax, Social Security, and everything. Okay, third story is you have, saying 25,000, you make 75,000, you declare 25,000, but you only spend 20,000, but 33,000 is what the actual fair market value is of that. What do you get? You only get the 20,000. You see kind of the scenario in each of those situations? So the option is really, some guys are like, set that thing really high and I'll pay less tax. No, you gotta prove it too. You can't just say, oh, I think I'm gonna travel 100,000 miles this year. In the end, you only traveled 20,000. Oh, but I declared 100,000. You can't do that. You have to be able to explain it, prove it, accommodate. So that's units. Again, this $5,000 excess has to come over here and filter through all of the taxes again. So you're not gaining by putting that number high. But don't give me. Housing allowance tip. Okay, here's something I love to talk to board members about. The church must officially designate the housing allowance before it makes the payment. An official designation can include an employee contract, minutes of the board, If you are retired, you can have a housing allowance from your pension. Okay, so here's what happens though sometimes. Churches say, you know, we don't pay our pastor much, but he lives in this mansion and it's worth $3,000 a month. And what they don't realize is you are paying Social Security 15.3% on that beautiful home that you get to live in, and it is costly to you. And so I like to talk to them and say, you're justifying it, you're feeling good that, yeah, he only gets $15,000 a year, but he lives in a $50,000 mansion, so he's really getting the best. You're saying, yeah, what you don't know is he's paying money in based on that $50,000 value. What's 15% of that is 5 and 7. He has to pay $7,500 in from his measly salary of $15,000. You're killing the guy. You want to set that as low as you can on the market scale. And I always say, board members, think about this. This is your house. He's gaining no equity in it. He's earning nothing. He's going to move on. He'll have nothing to buy a new house with. And he's maintaining your home. He's taking care of that. He's vacuuming it. He's cleaning it. He's mowing the lawn. He's changing the light bulbs. Don't cheat the government, but don't set that so high just so you can feel good. You know, we look on his payroll package, and I've seen some of these are offered in the past, and I'm like, wow,
$108,000. Oh, they valued their house at $100,000. They just killed the man. He's got $20,000 to pay 15% on a, you know, okay, I'm just getting a little stirred up here. Move on. Salary, here, W-2 plus, if you have other income, weddings, fuels, Schedule C. I'm gonna skip the non-accountable reimbursement, it gets a little complicated. Salary, less housing allowance, gets reported on line 1. Federal income tax is not withheld unless the pastor volunteers to have it done, and that's done on the W-4. Social Security and Medicare taxes are never withheld from the minister. If the voluntary withholding increase amounts on W-4 to cover that, you can do that. Let's kind of whip through some of these. Clergy incur expenses as employees and self-employed. Okay, here's a 1040. This is the old form in 18. We're just gonna skip over that one. Just ignore that. Let's look now at page, what page is that? 4, the one that says W-2 Evangel Training.
Yeah.
Okay. This is the W-2. This is a traditional form that you get now, you should be getting as an employee of the church. And you should have numbers in box 1, only there. And if you enter into a voluntary relationship, you might have a number in box 2. So let's say you make $35,000, they put it in there. In box 2, they say, you have volunteered and asked us to take out so much from your paycheck. It's your money, and we're taking out $8,350. There should be nothing in line 3, line 4, line 5, line 6. McDonald's employees got numbers in all of those places, but you should not have numbers in there. Someone say, well, we're gonna still treat him like an employee. We're gonna take out portion, we're gonna pay the 7.65, and he's gonna pay 7.5, we're gonna put it in. No, you can't do that. It's gotta be zeros there. It's gotta be zeros there, because you're saying, you're mandating them by doing that. The next.
Pastor, that was the W-2.
That's the W-2. Mm-hmm. The next one below that is a 1099 miscellaneous. This is the one that you get from weddings and funerals. Some pastors are still getting a 1099 miscellaneous. And then they take it, they roll it over onto a Schedule C, business law, and they run all those expenses, and then they move that total to the 1040. That should not be done. So this is the document. If you look on this document, on the miscellaneous, you look at line 4, federal income tax withheld. Even though you're self-employed, there is an arrangement where money can be taken out there as well. The honesty is that line was put in there when somebody, Joe's Tree Service, works for you and you pay them so much money, $25,000, but he does not give you his Social Security number or his employer identification number. The IRS requires you to take out 25% of what you pay him before you pay him, and you put it in there for him. They're making sure that he doesn't scam the government and walk off without paying. Page 4. Page 5. Page 5 is the critical form where we're talking about what needs to be done. If you look, this is what you fill out when you become an employee anywhere. It has all your information, and the line I'd like you to look at is 4C. 4C. It says, you don't qualify for any of this other stuff. There will be nothing in any of these other boxes because you're self-employed. But on line 4C, you can say, I want you to take out $400 for every paycheck. And that money goes into your pot at IRS. So Candace and I, we have this pot of funds, and they're tied to our Social Security number, and that goes into there in various ways that comes in there. If we estimate our taxes, if I have a second job at McDonald's, it doesn't matter if I'm a minister, they're gonna treat me exactly like an employee. So I will have some come in from there. Thank you. Or I estimate, or I do this voluntary income tax. All these ways come into my fund pot, and when I do my taxes and I say how much I owe, then they take it out of there. And if there's not enough in there, it'll say I owe something to the IRS. If I've got more than I need in there, I can get it back as a refund, or I can say, roll that over to next year. But line 4C is where you'll have them put that number in. Turning the page, to page 6, this is the standard I-1040 form. There's changes with it. This was a 2022 last year's copy. And I just do it all electronically, so I don't see the paper. But when you don't see the paper, you don't know where the numbers are coming or going from. The computer just puts them in the appropriate place, hopefully. There's your standard deduction, dependents, income, standard deduction, then line 12. That's our standard deduction or itemized. Oh, if it's itemized, Schedule A. Turn the page. The next, then it's your tax credits. If you get credits for child care credit or education or you subtract all those things, and it comes down to your payments then. You take this month number and you look at the tax charge, which now, since our computers, it calculates itself how much you pay in, and then that's whether it's a refund or how much you owe, and that's the 1040 form. Let's turn the page again to page 7. Here is where if you choose, and that's been what most people do, is they estimate their taxes, they pay them in on a quarterly basis. Farmers, business people, they do this all the time. And this declares the statement, and then there's vouchers. And each quarter you fill out this voucher. This is the 4th payment, number 4, and it tells you when it's due. But if you turn the page, it helps you determine how to calculate that. And then the next page, I think it might be the last page, is the 1040, where it shows each of those voucher forms. You get the packet, once you start it, you'll start getting them from them, and you tear off one and you send it in. So payment 1 comes in, it's due April 18th this year. Maybe the 15th landed on a Sunday or something. So those are the forms, the forms.
Is there a benefit to doing that as opposed to paying it all in lump sum?
The lump sum, even what I recommend is not lump sum. They pay it in every paycheck. The lump sum is beneficial in that you hang on to that money yourself longer and you pay it at the end of the year. But if you end up owing $500 or more and you haven't paid it until the end of the year, you get fined on a 2202. If you are okay if you pay at least everything that you owed from the previous year. Say you owed $1,000 and you paid in $1,100 and you find out you owe $2,000, you're still okay. But if you owe $500 and last year, you owed $500 and you haven't paid it in, you'll get fined. And this fines get penalties and fines, and they're steep. And so it's good to pay it in one of those 2 ways. They want the payments and they want it timely. And that's why they set the time when those are due. They're saying, you earned it, you pay the tax. You earn it, you pay the tax. You don't just wait till the end. If you owe less than 500, you'll be okay. Let me roll. I was originally going to go into dentistry. I was a pre-med major. Then I started looking at some of my clients and I thought, I don't want to look at that all day long. This is those forms again, W-2, we went through those. The withholding, W-4. Expenses related to self-employment income, funerals, weddings, we've covered that. My battery's running low. Okay, questions then? Any other questions you might have? This was kind of a blitz of going through it, and I hope I repeated enough to kind of some of it stick in your head.
So when you do voluntary withholding, that should be on the W-4?
Yep, line 4C.
Line 4C on the W-4. Life Church sets aside, for the Social Security and Medicaid payment, they take voluntarily out of our income and then give us a check each quarter that we owe it. And that's, as I understand, proper to do it that way too.
How you stated that, I have some questions.
Mm-hmm.
I encourage churches, I say, why are you forcing your pastor to pay the full 15.3%? what you said is that they have your designated, and then they pull out of there some of it and send it to you separately. They're just saying, you're not mature enough to set it aside.
Yeah.
But what I say is, no, pay the guy his full payroll, and if you decide to help him by paying half of his social security, then give that in a quarterly way. And that's what the district does, is I get a separate check. And we know what that's gonna be, and it gets calculated in, but.
So we do need you to talk to our board, that'd be great.
Yeah, and sometimes it's just a budget number.
Yeah.
So, other questions?
I'll give you mine. Well, number one, those of us that are up in the northwest part of this, or the part with the oil, you know, I mean, there's homes around us that are, you know, it's ridiculous what they're getting for rent and things like that. So they, and I'm not even sure how it's done with my taxes, because I've probably been doing them wrong for years. But the way our church does it is, so I have a line, they consider me self-employed totally. So I have a line of here's your income. The next line is, here's the 7.65 that we are giving to you. So I get that also. And then what goes to, then they match, you know, AG Financial, what they do with that. So, you know, so you see that, and then I just go as self-employed, so I keep track of all my expenses and things like that. And I pay in quarterly, just on my own, but my understanding.
IRS looks differently on it now. And
Right.
guys are still doing it, and I'm not here to question the ethics of what you're doing. I understand it. I'm frustrated because they force us to pay the whole chunk, but they don't give us the benefit of it. And so I'm saying, if I pay the whole chunk, the benefit is I can run a Schedule C and cut that down. But you've taken that away from me, because you say, you're not a self-employed, you're an employee for this part, but for this part, you're this, because we can't force you to do it. And so, I have a struggle with that we aren't able to do the Schedule C, but that's not what they look at it, so.
Okay, so the question I go from that, I start doing my taxes the right way this year after, let's just say I've been, 11 years I've been at, you know, at Lake Assembly.
Yeah.
So now we start doing them the correct way. Is that gonna red flag?
No.
Okay.
It'll simplify it, probably, yeah, no. Yeah,
If you do choose to, for example, ask the church to withhold certain amount per paycheck, how much percentage of your paycheck would you suggest asking them to withhold, or like set it apart?
There's two things. One is 15.3%, you know that's solid. You know you'll owe that. How much you owe on income. We have a progressive tax system, meaning the more you make, the higher your taxes are gonna be. And they go from 10% to 37%. I would say we're pretty much in 10% category. So you just say 15 plus 10, 25%. It's somewhere to start. Once you have a baseline, the next year you say, you know what, I got back a whole chunk. I wanna reduce that some.
And on that, you can also say, there's also a line or something where you can even withhold additional tax? Is
Yeah.
that correct?
That's
If
the-
you design, is that,
That's the 4C. That's the
Yes.
line 4C on the W4. Yep. Exactly.
if you want like extra insurance that you have enough to pay for your taxes, is that basically, yes, that's
I
what
tell,
we do.
you know, there's some trickiness in there that I don't know all of it. You know, run it by your tax person. But I'm just saying, the guy who said, I made $28,000 and I owe $6,000, where do I get that money? And he goes to see grandma every year for 2 years, and I said, you just can't do this, you gotta figure this out. And that's what's happened. And so I encourage, just do that, at least you're getting money in your fund, it's your money. And as a minister, everything, if you say, I get paid $75,000, and they give me another $10,000 to pay my taxes, that is income again. You're self-employed, that is income again. You can't say, they give you a bonus at the end of the year, that's income. It's not like an employee who, you know, whatever, it's income to you. Anyway, because you're self-employed, if they gave that for what you're doing, even if it's gifts at Christmas, I pay tax on it, I tithe on it. The only way it isn't if they write the check directly to me. Because if we all write it, all of us want to give to Jerry, Pastor Jerry, and we give to the church, we get tax credit for it. and so he has to pay taxes on it.
But I'll take it.
And
Either
so
way,
write
right?
your checks directly to Jerry or give him cash, which is fine. It's absolutely, you can give your pastor anything you want, but if they run it through the church, it's income.
Mm.
If you're, already collecting social security, can you still pay it?
Oh, yeah,
Social security?
mhm, yeah, you have to.
You have to.
Mhm.
Can you be my tax guy?
You can't afford me. That was stupid, shut up. I don't, thank you though.
This is probably having you restate an answer to a question I asked earlier, but, so it is proper for, I mean, it is, a church can elect to pay half of that pastor's
No.
self-employment?
No,
So
but
how can they do it?
But they can figure it out and they can say, we're gonna give you, in addition to your income, we're gonna give you this additional amount.
Okay,
And I'm really a technicality here.
right, no,
Yeah.
that's why I was asking,
Yeah,
because I
but-
thought maybe.
But churches do
That
that,
could be
and I
right.
encourage them, I say, this guy is having to pay the full 15.3%. Every other business in the world pays half of it. Why don't you pay half? Some of them pay half, some of them pay 10%, some of them pay the full 15%. But no matter what that percent is, that's additional income to you.
Mhm.
And that's gotta filter through the system again.
Mm.
So okay. They just can't call it.
Yeah, I usually do another drawing on here that helps you kind of figure out the difference between self-employed and employee, and we've run out of time, but.
Just quickly on deductions, I've heard there's some changes, coming down the pike, like, somebody had said to me, and I haven't looked this up, like, if you have entertainment or hospitality, it used to be that it would be 50%.
Yeah.
And somebody had just shared with me that will be no longer.
I heard that, and the
Okay.
miscellaneous, in that miscellaneous area is disappearing. There's a lot of areas on that Schedule A that are going away, and so, I just wanna be real careful, 'cause, you know,
Yes.
I'm giving you as honest as I know, and if things
Mhm.
change, that's why I'm saying, you know, and I think I'm pretty accurate,
Mhm.
but please have somebody that's doing it every day to check it out. Any other questions? Thanks so much, appreciate you
Thank you.
coming. I raced through some things pretty fast, I hope.
What happened?
It gets everybody nervous, you know?